I want to talk to you about using credit cards to actually start your business. Should you actually use a credit card to start your business this year? So, here are the common facts I want you to pay attention to. The thing is that when you think about using a credit card to start your business, you have pros and cons, right? You have advantages and disadvantages when it comes to actually using that form of financing. I want to first talk to you about using the pros, okay, the pros of using credit cards as a startup capital. The thing is that while it may sound like a risk to borrow funds to finance your new business endeavor, there are some good reasons to do so, especially if you have good credit or you have access to a pretty high limits credit cards. The pros of using a credit card to finance a startup extend well beyond convenience, though that is certainly an important factor. Okay, so whether you use the cards you have or apply for a new account, the benefits are really compelling. So, for instance, you have maximum equity, you have low or no interest deals, and you have no collateral requirements. So, that's really important. So, when I speak about maximum equity, in general, people willing to take the risks associated with launching a startup believe they have lucrative ideas on their hands. So, maintaining control, therefore, can be attractive. So, the further you can take your business idea without outside financing help, the more of your company's equity you can keep for yourself, and the less oversight you will have to deal with. So when you use a credit card, your company's interest basically stays with you. So that's really good. You also have low or no interest deals. So with credit cards and also business credit cards, you have low interest rates, and the ubiquity of low interest rates has made it common practice for banks to offer appealing packages to credit-worthy individuals and business owners, and many credit card issuers offer a 0% interest rates for a limited time. This could be 12 months, this could be 18 months. We even have 24 months. And some are for balance transfers or even new purchases, okay? So escaping financing fees for a year or more on upcoming or past purchases can help your company's bottom line big time. So let me give you one compelling example. You have the Slate Edge by Chase, which really offers a 0% on purchases and balance transfers for 18 months. Can you imagine? 18 months. That's really fantastic. And you have a no collateral requirements. That's the third plus. So request on business, if you request a business loan or line of credit from a bank, and you can be prepared to offer collateral such as inventory or property, since many of these products are secured. Okay. However, most credit cards are unsecured, so you will not actually need to scrape up front funds to enjoy access to the credit line. There are actually other perks. If you think about using a credit card to start your business, there are other benefits that you can really think about. Okay, so while opening a business credit card and using it responsibly, is actually a smart choice for most business owners. Using it to fund your business is not right for everyone. Okay, but it's one of those things where you have to really understand that a business credit card could be a lifeline for businesses that have exhausted more traditional lending options or don't need a large amount of funding. So if your business say needs 5,000 or 10,000 to actually to start up, then you can really finance that through a business credit card. That's for sure. Okay, and remember that credit cards are typically easier to qualify for than business loans. So business loan qualification often hinges on time in business, annual revenue, collateral, and credit score. And by credit score, I'm talking about your personal credit score, but also your paydebt score, your business credit score, among other things. Business credit cards, on the other hand, typically depend on your credit history and score. And you can access funds quickly. So if you're thinking about using a business credit card to start a business, you can actually get access to funds quickly. So the entire small business administration loan process could take up to 90 days, and bank loans can be slow to fund too. So while online loans have faster turnaround times, credit cards can be even faster. And you can also earn rewards for every dollar spent. So this is kind of cool. I mean, when you have those rewards credit card, that's a really a great possibility. So kind of similar to personal credit cards, many business credit cards come with rewards programs that offer cashback or points or miles for travel. Okay, So using these rewards to offset other business costs, it's really an added bonus. And also, when you think about using a business credit card to start a business, you have the possibility to establish your business credit. So to build your business credit, aim to pay off the credit card in full every month to keep debt at a minimum. So a history of using credit responsibly can help your business qualify for more funding options down the line. Now, those are the pros of using credit cards to start your business. Let me talk to you about the flip side, the cons of using credit cards to jumpstart your enterprise. First of all, you are intertwining business and personal expenses. So when you use a credit card to fund a business venture, the distinction between your business and personal finances can blur, right? You will need to keep all of those changes totally separate, and which requires dedication. If they actually become mixed, your accounting will be off, which will actually make tax time more complicated because you will have to sift through line items to identify deductible expenses. You also have potential credit score damage because see the whole thing is when you think about using a credit card to start a business, you got to think simultaneously about your personal credit score, but also your business credit score. So, so when I speak about potential credit score damage, this is something real because no matter how confident you are that your company will be a success, nearly all startups are inherently risky. So when you use a credit card as a source of funding, you are gambling with your personal credit score. So everything you do actually with the account can be recorded on your credit reports. And if you charge too much or miss payments, your score will decline. And this will put you in a tough spot when you want to apply for other credit products. So I'm speaking here about your credit score on all three credit bureaus, okay? So you're speaking about TransUnion, Experian, and Equifax. You also have a personal risk for a lawsuit. So if your company doesn't succeed, and there is a higher chance that this might happen because again, it's just statistics. So if your company doesn't succeed, the debt you incurred with a credit card will be a financial and legal responsibility. And collectors actually may attempt to recoup what's owed not only from your company's assets, but also your personal income and assets, especially if you don't have this corporate veil element. So you can be sued for the unpaid balance if you don't satisfy the liability. And this is really important to actually account for. Let me give you other drawbacks. So when you think about using a credit card to finance your business, you have no guarantee for a lender. So to qualify for a business card, the issuer will assess not only your ability to pay, but also your personal credit standing. So if you've had problems with credit in the past, your credit report and credit scores may already be damaged. If that's the case, you may not qualify for the best cards for you to help to actually launch or grow your business. Also, with credit cards, you have the potential of having low limits because credit cards are typically unsecured. The issuer takes considerable risk in granting a large credit line. So for this reason, spending limits may be lower than they are for secured loans and lines of credit. And credit cards usually tap out at the $50,000 to $100,000 mark. If you need to borrow a substantial sum, a credit card alone can leave you short on essential funds. And you also have, this is very important. When you think about using a credit card to start your business, you have a pretty easy path towards overextension. Okay, so spending more than you can afford to pay back quickly is remarkably easy with a credit card. If you do, you will end up in debt that you can actually debt can follow you for years because many credit cards have high interest compounds and rates. The financing fees will make the balance very expensive. So, and if you want to apply, let's say you want to apply for different financing options, that debt can make you ineligible, particularly for loans with preferable terms. So there are other drawbacks to really think about when you consider using a credit card to start your business. So basically, you probably need to sign a personal guarantee. In other words, you will be personally responsible for paying off your credit card balance if your business cannot. This puts you, I think I've said this before, but this puts your personal assets at risk. Some business credit cards also report to consumer credit bureaus, which means your personal credit score can be affected by your business spending for better or worse. Also, loans may give you access to higher limits and longer terms, okay? And I mean, while business credit cards can be used for, let's say, everyday business expenses, what happens here is that term loans may be a more fitting option for long term financing and large purchases like real estate. If your business wants to invest in real estate, think about having a loan. That's just a lot better. So let me give you the steps here. How do you finance a startup with a credit card? Let's talk about that like this year. How do you do things properly? What you want to do first and foremost is creating a charging plan. So before you make even a single charge, decide what the credit card is for, right? You do not want to have a credit card for everything. So you may want to use it exclusively. You may want to use the credit card exclusively for certain expenses such as shipping or marketing. So whatever you do, never put anything on the card and hope for the best. If you open a 0% APR card, you have more flexibility with charging and rolling over balances, but make sure you satisfy the debt before the regular rates kicks in. Okay, it's all about anticipating stuff. Okay, you never know. So that's the first thing. You want to create a charging plan. And the second thing you want to do here is that you want to commit to a short-term debt. So make a habit of paying off the entire balance by the due date. By doing so, you'll be guaranteed a 30-day interest-free loan. And there may be times when you don't want to pay over time, but don't extend it much longer than 3 or 4 months, okay? It's all about making sure that you're looking at your cash inflows versus cash outflows. You want to calculate how long it will take you to delete, let's say, a credit card debt in a few installments, and then commit to that payment schedule until you are back to a zero balance. Next, you want to maximize rewards, okay? Now, a reward-heavy credit card can be a business owner's best friend. And if you get a new card that comes with an introductory bonus, you are off to a lucrative start. So you want to charge, let's say, an expensive purchase, and the issuer will give you a substantial amount of points or cashback. Let me give you an example. Bank of America has a Business Advantage Unlimited Cash Rewards MasterCard that offers actually a $300 online statement credit after charging $3,000 within the first 90 days opening the account. Okay, so whichever rewards card you obtain, use it accordingly to your charging plan to actually keep the rewards coming. You will benefit from the process by paying the balance before interest is applied. So if you are thinking about using a credit card to start your business, you do have alternatives, by the way, though. This is something that's really important to think about. You have alternatives to financing a startup with credit cards. So for instance, you have personal capital. I mean, if you have a little bit of cash, use it. I mean, don't look past your personal financial capabilities. If you have money set aside in savings or in an investment account, consider tapping into it. You may also use the equity in your home with a home equity line of credit, or you can sell valuable items or use the proceeds to cover some cost, okay? In fact, the more of your own cash you invest in your business, the more carefully you are likely to spend it. It's one of those things where you literally have equity, okay? You can think about a business loan. I think I've spoken to you about business loan being a stronger sort of a path to really follow this year. So a business loan you take out from a bank, credit union, or online lender such as Bluevine, such as you have a lot of them. You have a lot of players. So this is actually perfect for major expenditures that you want to repay over time. And here I'm speaking about renovations, for example, or even costly office equipment, or even factory equipment. So the interest rates are typically lower than they are for credit cards, and the fixed monthly payments take the guesswork out of what you need to send every month. So this is kind of cool. And you can also think about your entourage. You can really tap into your entourage. So here I'm speaking about friends and family. So people who love and trust you may be willing to lend you money for your company. However, you will have to be more cautious, very cautious with this type of loan. So a valued relationship is on the line if it doesn't work out and you can't pay the person back, right? So every party needs to be on the same page. So you want to write all the terms down, including what you will use the money for and how and when you will actually repay it. And both parties should sign the document and file a copy. So that's really what you want to do. And so because see, the whole thing is you want everybody to be on the safe side. That's what it is. It has to be a win-win situation. If you ever want to rely on family or friends as a source of capital, you need to have a pretty straightforward process. So when you think about alternatives when it comes to financing a startup, you can think about outside investors also. This is also a pretty strong possibility. So another funding option is actually finding wealthy individuals to be angel investors in your startup or a venture capital firm that's interested in backing your idea in exchange for a stake in your company. The thing is that if you go to a VC firm, they will ask you for equity. That's for sure. They're not going to ask you for a loan. Like they're not giving you a loan and you have to pay them like 10% or 20% every month. No, they will ask for equity. And you can also try crowdfunding platforms. So crowdfunding platforms like Kickstarter and Indiegogo are another way to generate spending money. In exchange, you may have to you may have to send the supporters products, equity, or interest on a loan. And alternative funding sources for small businesses besides bank loans, SBA loans, and online loans. You can also think about business lines of credit. You can also have a special arrangement. And by the way, you can also think about reaching out to you do have nonprofit business loans, but this will depend on the place where you are at, your state and look your city and state, because some state governments do have institutions that help entrepreneurs actually launch their business. So the process can be a little more convoluted though, because anytime you're getting money from a state government or a federal government, you just be prepared to have a lot of paperwork. It's kind of similar to an SBA loan. Okay, they ask for all kinds of information, like you might have to provide personal financial statements, and I'm talking about pretty detailed personal financial statements. Okay, they'll ask you for your P&L, your profit and loss, your income your cash flow statements, your balance sheet, and in most cases they might also ask you to provide your tax returns for the last 2 to 3 years, just to make sure that you are actually in good terms with the IRS. Okay, so that's really that's actually an area of funding sources you have if you do not want to go with a credit card. So in closure, into this conversation, I spoke to you about whether or not you should use a credit card to start your business. I give you the common facts, the pros, the cons, the steps, the alternatives. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.